Hello, everybody. Today I'll be talking about a company which is the leader in the defense space on the electronics side, that is Bharat Electronics Limited. Uh, the reason for why I am giving this talk at this point in time is that we know that a second wave of COVID, which is much higher than the first one, has started emerging in most of the states, and it is becoming quite severe. So Bharat Electronics, we know that it had ventured into manufacturing of ventilators in the first half of FY21, and that had secured a very good revenues as well as margins to the company. And they sold about 30 to 40,000 ventilators to the Ministry of Defense in that particular half of the year, and the revenues had also jumped quite significantly to the tune of about 20 to 25% in that particular period. And the EBITDA margins also were relatively at par with the core business. Earlier we all were wondering and were a bit skeptical about the EBITDA margin performance of the ventilator business, but at the end of H1 we were all heartened to see that the EBITDA margins are at quite par, that is at about 15-16% as compared to 17-18 or 19% of the core business. There was not much of a difference, and that's why we believe that with the second wave emerging like hell, we can definitely fancy a good amount of ventilator orders for BEL. And that may definitely lead to a jump in the top line, but also maybe the margins will be remaining stable if not improve from the current levels. Currently the margins are close to about 19 to 20%, and with the ventilator orders, we don't think that it will come down significantly much, but it may remain at par. So that is a very good opportunity that the company can foresee with the current pandemic. Secondly, on speaking on the core business, we all know that the company has been doing really fantastically well, with defense orders coming from all the quarters of the defense, like air force, military, as well as air force, military, as well as the navy. And considering its financials, we know that the balance sheet is quite strong, with zero debt, hardly any capex, and the ROE, the return ratios, ROE and ROC, are also quite robust for the company. And also we know that the company is very much based and dependent on its R&D. About 50 to 52% of its employee strength are scientists and engineers, and R&D comprises about 8% of its total costs, and it has been continuously moving up. That shows how much emphasis the company has on research. So based on all these fundas and factors, I think that the company is very well placed to take the advantage of the current pandemic, and also manage its the core business quite well, with order inflow coming up from various businesses, and from the Ministry of Defense. So we at this point in time think that at current levels the stock is quite looking attractive, and with a target of 160 rupees, we are maintaining our buy rating. Thank you.